am here with the Jersey Mike's CEO, Charlie Morrison. Charlie, thanks for joining. Congratulations on listing today.
Thank you. It's a great day for Jersey Mike's.
I have to say, I don't envy any CEO that has to list in this crazy market we're living in right now. It has been quite volatile, and especially for a lot of your peers. I mean, Sweet Green down 4%, Shake Shack down 24% year to date, Wingstop also, which you once led, down 44%. So why was, amid all of that, why was now the right time to IPO?
I think it's a great time to IPO Jersey Mike's. This is a brand that's been built over many, many years. We have a rich history of over 70 years. The last 20 years alone, the only brand that can cite 20 consecutive years of positive same-store sales growth. We've been able to navigate the choppy waters over many, many, many times through our cycle. Even this year, year to date, same-store sales continue to grow. We've seen sequential improvement from quarter one to quarter two, exiting quarter two at 2.3% same-store sales growth. Most of that driven by traffic. So it's a great time to bring this brand to the market. We can deal with some of the challenges that are in there, but really it's for the long term.
So the fundamentals look good heading into this, but was there ever a banker that was thinking, hey, Charlie, maybe now's not the time, maybe we need to wait for calmer waters?
Not at all.
They told you full steam ahead?
Yeah, this is a brand that's really well built for the public market.
What about the pricing? Because shares have fallen, initially down 8.7%. They've come back, of course, now down only about 4%. What do you think of the pricing? Was the pricing off perhaps, and that's why we're falling? Today, maybe valuation's a little bit too richly priced, rather?
No, I don't think it has anything to do with the pricing. I think the market's been a little choppy over the last few days, trying to find its place. Again, we're not looking at today's price. We're not worried about this. We're worried about the long term and continuing to do what we do well, which is grow restaurants, grow our same-store sales growth, continue to deliver great value for our shareholders, and we know they're going to win over the long term.
Let's talk about the long term, because now with IPO proceeds in hand, what do you want to do with them? What are the opportunities for growth that you're going to be pursuing?
Well, I mean, we're a brand that is an asset-light model, so we're 99% franchise. We generate a lot of cash. We carry some debt. We're using the primary proceeds just to pay down our debt a little bit, so we get down below 4.5 times our EBITDA, and that's okay. Over time, we really will use our cash to return that capital back to shareholders, which is very much the common practice in a business like ours, and that'll be the continued pace over time.
I know one of the growth strategies that you're pursuing is international expansion. You have big plans for the UK specifically. I know the market. I lived there for a while, for about 6 years. They do eat at Subways, so they know sandwiches. Quality might vary there, but they love like a Tesco's meal deal where they get, a sandwich and a bag of crisps, as they would call it, for £4. How do you convince them, and how are you certain that a British audience would like a Jersey Mike's?
Well, we know people all over the world enjoy sandwiches and sub-sandwiches. Certainly the market's been well established. What they don't know is the authenticity of how to really deliver a deli-style sandwich the right way, the way we do it here at Jersey Mike's. That's been part of who we are for the last 50 years. It's exactly what we're going to bring to the UK. We're going to bring the brand in its full force to the UK. And look, we have a hot sub option as well. So our cheesesteaks, our hot subs, other products will be anchored on the menu. And we're going to do it in a high quality way. People want that kind of quality and authenticity.
Anything new
Not
for
really.
the Brits?
I mean, one little thing maybe, we might bring salted beef to the protein mix and lineup. We know that's a big fan favorite overseas in the UK. And so you might see that change, but otherwise it's going to be authentically what we've been all about at Jersey Mike's.
I also love this subtle dig of they know subs out there, but like maybe not the real deli style. Charlie, elsewhere, here in the US, there has been this real concern about the outbreak of Cyclospora and the concern about iceberg lettuce. I know a lot of the majority of Jersey Mike's subs use iceberg lettuce. Is your supply chain affected at all?
We are not. We're not affected at all. In fact, we do buy whole head iceberg lettuce, but we buy it from primarily Salinas, California this time of year, none from Mexico. We actually take very good care of that product. We bring it in a whole head fashion. We peel the outer leaves off, wash it carefully, and actually shred it for our customers right there. And so we don't see any risk associated. That hasn't impacted our business.
It maybe hasn't impacted your supply chain. Chipotle said the same thing. We source it somewhere else, but yesterday they pointed out it has impacted sales because of the psychological concerns. Are consumers pushing back? Or maybe at least not asking for lettuce on their sandwiches?
Well, every one of our sandwiches can be customized because we make it to order right in front of you. And so if a customer wants to opt out of the lettuce, that's fine with us. We'll accommodate that.
Have they been?
And not really. I mean, we've been eating them for the last 2 weeks on the road. We've been enjoying them. I think customers understand that the supply chain moves very quickly. The product's probably out of the supply chain and everything's fine.
The credit card and debit card data that the Bloomberg team tracks does show a little bit of slowing in July for Jersey Mike's. Certainly still growing, but a slowdown in that growth. What accounts for that then if it's not the lettuce of it all?
Well, I think there's a lot going on in the marketplace right now. I wouldn't look to any 1 or 2 weeks as indicative. Lots of things kind of ebb and flow, and too often you can get too much data that'll point to two different things, but right now we haven't seen much.
So summer sales have been strong, maybe besides a little bit of July?
Yeah, we haven't talked about anything about this particular quarter at this point. We certainly saw strong performance in the first quarter, sequentially improving in the second quarter. We exited the second quarter on a strong note as well, and so we're going to continue to play our game and execute a game plan that is going to drive long-term sustainable same-store sales growth.
So I hate to do this to you, and I hope you don't check your social media mentions, but if you just look up Jersey Mike's, there is just a wide swath of people who say, since the Blackstone PE overlords came in, they've changed the sandwiches. They have, shrunk in size. People love to complain that PE comes and ruins their favorite sandwiches. Charlie, can you say here definitively, have the sandwiches changed at all, quality or otherwise?
Not at all.
Since you came into the helm?
Not at all. That's just hype in social media. They like to pick on people for that reason. We haven't done nothing. I mean, I've been involved almost as long as Blackstone has. We haven't changed a thing. Why would we? This brand has grown 20 consecutive years, positive same-store sales growth. We don't need to change the menu. We enjoy one of the lowest food costs in the industry. Our franchisees have some of the highest cash-on-cash returns in the industry. They want to grow and build more stores, and they're going to do that. And so no need to change anything. We love this brand. We love the way we deliver the product, and we're going to continue to do it that way for a long time to come.
On the cost, because generally this market, if you track the macro data, things like dairy, meats, the prices have been rising. How have you been accounting for that? How do you keep your margins?
Well, we have a very diverse lineup in our menu in terms of the proteins that we offer, so beef, chicken, pork, different products all within our menu. And we're able to balance that over time. So as one is high, like beef prices today, we focus on other parts of our business. And we've been able to maintain that over time. We also have a very scaled supply chain. Over 3,000 restaurants strong. We buy in very high volumes and are able to hand that back to our franchisees in the form of a very low food cost, around 27% of sales, which is industry leading.
How about prices? Are you able to use that as a lever to charge higher prices for your sandwiches?
Certainly over time, we do take price. Our long-term algorithm is low single-digit same-store sales growth for this business. That will be equally balanced between price and transaction growth. We err towards transaction growth. That's really how you grow the health of the business over time. We've taken some price as we've seen commodity inflation, not nearly as much as some other brands, and that, quite frankly, is what's been fueling our growth this year and years prior compared to the rest of the concepts out there.